In this video, traders, I'm going to answer a question from a subscriber, which is this. Why do most intraday traders, or day traders, struggle? And here's my thoughts on it. Stay tuned. Hey guys, warm welcome to you. Thank you so much for joining me. Appreciate all your support, comments, subscription, etc. Okay, so this is a really common question. And it's why do day traders, intraday traders struggle the most? It does seem that day traders really do struggle. So why is that? Because there's no difference really. Are we still executing a trade, a long or short, based on a thesis, whether we think the market's going to go up or down on whatever asset we're trading? There's no real difference. But for some reason, that intraday aspect of it tends to really have a kind of bad reputation and seems to, honestly, does have a lot of people in there who are losers. Now, one thing I want to point out, guys, is that day trading will attract the gambling type. So we've got to be careful. We don't look at the whole statistics and go, oh, well, we kind of bundle it all in. There's going to be a good chunk, if not 50%, maybe that's a bit high, but there's a lot of people who come in to day trading who are gamblers. They've got no real desire to kind of get better at trading the markets and understand the markets, the nuances and the discipline, etc., all that stuff. They're just there to gamble, and it happens to be a vehicle for them. It could be online slots, it could be roulette, it could be betting on the football, anything. You get the point. So we've got to be careful about those broad statistics. So day trading does attract those, but there is still a big percentage of people who are executing on an intraday level who are struggling. And why is that compared to swing traders? Now listen, swing trading is not a magic holy grail. You're not going to suddenly change time frames and become fabulously profitable overnight. But it does seem to me that it's just a little bit of a different feel about it. So the first thing I think is that you've got emotion, much more emotion involved in day trading, and really the urgency and emotion goes together. What do I mean by this? So if you think about a swing trading position, you wait until you get your level, you get filled, you might even be at the screen, you might have resting order in, and you have time. So even if you feel like you've missed out on a trade, or even if you're upset about a previous trade or frustrated or any of those things, you have time to deal with that emotion. So let's say you're angry, you got stopped out on a trade, for example. If you're swing trading, you can walk away and you think, well, I can just wait now and do my analysis at the end of the day, run through my charts, run through my setups and strategies and look for another trade, and not feel as if that emotion's clouding you so much. Whereas if you're day trading, if you have that emotion, you've got to be pretty good at dissipating that quickly, or it's going to have a lot more influence over your next trades than you'd like. If you're frustrated about a stop out and you've got the whole day ahead of you, you're either going to have to deal with that and get over that pretty quickly, or it might well cause you to take trades you shouldn't have to take. The other thing is urgency. So with swing trading, you've got all the time in the world. Well, I say that, but you've got all the time in the world compared to perhaps day trading. So let's say if you're day trading and you're looking to take 20 points out of the market. Let's say we're trading Dow, or 20 pips. Let's say we're scalping away, even 30 pips, 50 pips, whatever. If you are not quick with your execution, now we've got to be careful here. We don't say chasing stuff or being too responsive. But if we're not getting that sweet spot of the flush or the little pause before the continuation or whatever we're trading, then 10 ticks late, 15 ticks late really changes the risk order ratio of the trade massively, especially if we're looking for, say, 30 ticks, 30 pips. So the urgency, and we recognize this, and we have this urgency in our mind, and so we start to think, okay, I need to get this trade, get this trade, get this trade. And if we miss it, there's a lot of consequences. Whereas if you're swing trading, you might well miss a day, and yes, I appreciate sometimes that could be the juicy day that really gives you the head start on the trade, but the longer time you've got to let the trade mature, multiple weeks, multiple months, whatever it may be, multiple days, then the urgency becomes less. It's just a pure linear observation, isn't it? If we're looking at a time period of 30 minutes, then really a couple of minutes is quite important, or 10 minutes, even more important. If we're looking for 30 days, then obviously we've got a few hours or a few days to get into that. So the urgency is far, far less, and so we have far less pressure on us to execute and to do the things that perhaps we would be doing if we're day trading versus swing trading. Okay, another thing is, number 3, guys, is over trading. Huge one, this. And listen, does still affect swing traders? Of course it does. And something that swing traders do actually is have multiple positions. Day traders do maybe, but that's not generally as much as a problem because you haven't got the time on your hands, so to speak, to be in multiple positions. Now, day traders can be, but it's more, sometimes swing traders tend to kind of churn around, and of course there is over trading there as well. But day trading becomes more a case of, I feel like I need to be in the market because the market is moving. I'm going to take opportunities that aren't really there. And so over trading means that you're trading when you don't have your edge. If you don't have your edge, maybe at best you've got a 50-50 expectancy, but in the real world, because of psychological negative expectancy to have from a human being, i.e. I'm cutting my winners quickly, I'm running my losers, I'm getting fresh, I'm doing all the stuff that loses over time, then that it tends then to have more of an impact on you on your overtrading. So overtrading really affects the intraday trader. Another thing that's quite common is losing sight of the bigger picture. So day traders, we can be, and listen guys, every day trader knows that this has got to be careful of this. You end up focusing so much on that execution chart, whether it's a 1 minute chart, whether it's a depth of market, 5 minute chart, whatever it is. Sometimes you can lose perspective of what does the market want to do in the day. Is it going to trade low to high today? Is it a trend day? Is it a rotational day? And you start to be so focused, you forget to look back at the daily chart or even the weekly and go, okay, remember, we are dipping down on or whatever it may be, and then structuring your trade around that. So listen, it's not all bad news, guys. Day trading is a great way of fine-tuning your entry if you can do it. And you don't necessarily have to be trading 20, 30 times a day. You can just trade once a day, twice a week. You can still trade on a lower time frame, so that immediately gets rid of the urgency thing. You say, listen, I've got a very specific setup I like to trade. I have the time to be able to sit and look at the market at the open, for example. So let me look and wait for that setup, and I might get it twice a week. And so yes, whilst traditionally you're day trading because you're only taking the trade intraday, you can get rid of that pressure to overtrade, and you probably find that's even better for you. And same with the emotion, if you're trading less but still on an intraday time frame, then you have time to deal with the emotional side of trading without letting it cloud your judgment because you're not trading as frequently. So you don't have to be so the day trading doesn't mean being super active. You can take as fewer trades as you like and still have good success at it without having to churn away day after day after day after day, hour after hour after hour after hour. Now, some people do that, fine, it works for them. Some people do the other side of it. So pros and cons, guys, as you can see. What do you think is maybe something else that makes intraday traders struggle? Perhaps you're a day trader. Maybe you've made the transition from day trading to swing trading and you've gone, hey, you know what, this is much easier for me. It's much calmer. I don't feel as much pressure. Or maybe you've gone the other way around. Maybe you're like, you know what, I like the pressure. I thrive on the pressure. I'm much better at kind of noticing the short-term imperfections in price rather than kind of predicting over the next week or month. Interesting to hear what you guys have got to say. All right, guys, take care. Keep the risk managed. I'll see you in the next one. Goodbye.